Hi, this is Paul from globaltradingsoftware.com, and this is a ThinkorSwim tutorial for swing trading stocks. Now, this is strategies I've been using for probably nearly 20 years now, and I just wanted to go through how I frame the chart with the channel on the weekly time frame, those support and resistance zones, looking at that behavior and setting up those trades and using some tools. Again, these tools have been developed from my strategy that is successful, so it was just me being purely lazy, so I didn't have to do all the work, and some of the indicators actually do the work for me, so less time in front of the chart. So let's get going. This is the weekly time frame for EW. So the first thing you do is you're going to identify a stock that's in growth. Now this is in growth, okay? It's quite simple. October 2015, we have been in a really strong growth channel. Yes, we had the pandemic pullback last year, but it found good support and it's moved back up again. So, despite COVID, this stock has continued within its growth, for the last 6 years. So, how do we put this channel on? We're just going to use a parallel channel. One of the things I like to do is these pivots here on the weekly, really take that in as my trend line. The bottom line you'll see is not exactly at this pivot here, because more important to me is lots of confluence down on this center line. So we can see we've got a little bit of support just down here where the cursor is, just putting a little ellipse in there. We then have lots of resistance coming in here, lots of touches on this weekly. Again on this ellipse here, again here. So this is really a lot of confluence on this center line. This is our sort of line of best fit, if you like, for those engineers. We've got a lot of clustering around here, and we've got a little support coming in here. So center line is crucial. We've got 1, 2, 3, 4, 5 touches on the top line there. So two touches are a line, 3 or more is a trend. That's pretty good. We've got lots of confluence on the center line here, and then we've got rejection in or around that bottom line here. So this is our channel. We've framed the chart there. The next thing is our linear support and resistance zones, the ones that we're going to probably help us on that daily time frame with swing trading or the weekly, that are going to help us in the future. So we don't want to go too far down here, but this is one that I'm really looking at first, this bottom one, where the high is around about 66.87, and we've got a low around about 64.51. So how do I identify the top and bottom of those zones? So one of the things I like to look at really is big tests and rejections here. We've got 2 pivots here. We've got 1, 2, 3, 4, 5, 6 wicks on this, real showing good support here. Previous to this though, we've got good resistance here, 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 here. So this identifies the top and the bottom of our zone. And then moving forward here, we've got a pivot, real big move up here. This would have been on big volume and rejected. That forms the top. The bottom of this zone is this big pivot move down here that was rejected and moved back up again to that, and then within this zone we got another test here where the cursor is that rejected. We got a lot of clustering in here, so this is a good zone as well. And then more recently we've had this test at the upper bound of that channel here, so this defines the top of our zone. The bottom of our zone is this pullback here, pivot and go again. So you can see I'm just looking for those pivots that identify the top and bottom of the zone. We did have another test in here for resistance, and it came back down quite dramatically where my cursor is here. So again, good zone. And then very recently we've had a couple of attempts here. Zoom in on this one a little bit. A couple of attempts, these wicks into this zone, but really the top of this zone for me is this. Just adjust that slightly. On this week here, we gapped up and then rejected and sold, and we got this bearish engulfing here, and it came back down and pulled back. So that's the top of my zone. Bottom of my zone, really just looking at these wicks here and here. Just adjust that slightly. You can see here this wick and this wick here, we just, there's so many different wicks pushing into this zone. This is a really good zone. So that really has framed our chart for the future, and we can extend this one right a little bit here, because this will come into play again in the future. So one of my favorite time frames is daily time frame. Really, I'm looking at the moves on the daily time frame within this growth channel. Okay, we did have a fifth wave move after the pandemic pullback on EW, of $56 to 98. That was a great move. I personally didn't get that one, but there are good moves on the weekly, but the better ones for me are on the daily time frame. So let's go to that time frame now. Okay, so I'm just going to explain a little bit about what's going off on this time frame for now. So we've got quite a few indicators and things like that on there. So I'm going to start at the bottom. We've got a false breakout stochastic here, which is part of the Elliott Wave indicator suite. So one of the things we look at on the false breakout are this yellow line here. These are false breakouts of the overbought zone, denoting a really strong bullish trend. When it pulls back against that false breakout bar, if you like, and crosses over in the oversold zone, it's like an elastic band. It wants to go back to that bullish state. In there we've got some dots as well. This is called a bias indicator. It's a separate indicator, but what it does, it looks up a time frame. So it looks up to the weekly and tells us whether we're bearish bias, neutral is yellow, and bullish is green, and we'll come back to that in a little while. The next one above is an Elliott Wave oscillator. So this is where Elliott Wave comes in, because Elliott Wave is really about behavior of that profit taking pullback, and like to trade that fifth wave of that move, and that's what's setting up now. And that really measures that performance of that wave 4 pullback, along with some of the things we'll talk about in a minute. So it's all about behavior, and we need to have a set of rules for measuring behavior that we can repeat over and over and over again. And over time, this type of combination, if you like, really looks at that wave 4 pullback. So we can see this oscillator is now pulled back between 90 and 140% on this. You can see we're just printing red here. So this is in our zone for that wave 4 to be behaving properly. The stochastics crossed over in the oversold zone. So that's the subchart. Now the main chart here, we can see we've had this real big impulse move up. We've hit the top of the channel. Now we're coming down, and we've had some profit taking. These zones here are probability. These are fib zones, if you like. So when we've had a big impulse move, we've got some fib zones here that are probability zones that if we do find support in these zones and we move away, the likelihood is of in this fifth wave target, which is a new high, centered around about 101.40 here in this sort of bluey purple at the top there. Green, if we find support in there, it's an 85% probability it's going to go on and hit that fifth wave. Amber is 80, and the red is 75%, still good probability. We also have on this chart EMA Clouds. You'll see there's a grey, which is a 55. These are all, you can change the settings on these. And the pink is an 89. So when we're sort of on the daily time frame, those 55 and 89 are really crucial for me on the wave 4 pullback. If you like, this is a non-linear support zone. So when we do come down like this, you see how we've been testing the 55. Now the 89 seems to have held, but also the confluence of that EMA cloud and this support and resistance zones we drew from the weekly, finding support in there on that wave 4 is crucial. We can see the Elliott waves give us a 1, 2, 3, 4. It's that wave 4 pullback where most of the work is done to measure that. Before I had to do all of this manually, but now these indicator suites that I have had developed help me identify that behavior. So I just want to go back in time a little bit on this impulse move, because part of our swing trading bundle is that we have the xBratAlgo. So this is my trading brain, if you like, put into an algorithm, and it sort of looks for early moves into an impulse move like this third wave. And what it does is grade those 3, 4, 5 and 6 star, 6 star being the highest probability. Now yes, it's great and we can trade those fifth wave moves, but what about getting in early to these reversals and this big impulse move? Now this is where the xBratAlgo comes in that we are looking for those to me I only trade 6 star, but we still need that chart craft where we've got this linear support and resistance zone where this 5 star failed for, 5 star signal here. We wouldn't go long until we break this pivot here, the top of this zone. It failed, it came back down again. Now we get 4, 5, 6, so the momentum's building up here. But one of the other things that we look at and we use is this these bias indicator down here. So when we get the foot, we see here all of them go red here, so we are bearish bias on the weekly. Then we go neutral, red, neutral, and then we go green now. So the bias is bullish on the weekly. We get a 4 star buy. If we didn't have resistance up here, we would be looking for that long pretty quick. As it happens, we've got resistance and we need to be patient. We've identified a zone on our weekly. Even though we've got a 6 star buy now, our bias is bullish, everything's looking good, we need to be patient and wait. We've also got to consider earnings coming up, okay, catalyst for a big move. So one of the things we want to look for is when we get this 6 star buy, our entry would be above this pivot and this zone here, in and around about 88.45, something like that. That would be our entry there. Again, a couple of days before earnings, always good. Keep your stops tight, looking for that impulse leg move up, and that was a great trade up here. One of the things that's not available at the moment are these coloured candles. Now this is something that's in development right now, and this basically tells you the volume of a candle. So let me just explain this. Now this will be coming soon. What we're looking for is when we run out of juice on a big move up like this, these are up candles, so these are bullish candles, but they're not coloured in green, they're coloured in grey because the volume compared to the previous candle is lower. And then we get another up day, but it's grey again, so that volume's even lower. So it's like a roller coaster, it's running out of juice. Then we get increased volume, red, to the down day, which is it's a sign that this is running out of juice. And then we try and move up. We get a bullish day, it's grey, but it's an indecision doji. Then we get an increased volume day going up, but again it's not broken these highs. Then these cyan candles are low volume, bearish days, but then you can see the volume starting to pick up. So for me, excuse me, we're trying to look for the exhaustion here to help us get out of that trade, and that's one of the things we need on a trade management type thing, is understanding what's going off on volume. But we are developing something for that right now. But then we have this wave for pullback, which is profit taking, which is a natural behavior in the markets. Whether you're a retail trader, institutional trader, that profit taking is natural. Okay, earnings comes in, we're already in this trade from this 6 star buy, we get this massive move up, we start to run out of juice, some people start to sell, and then that herd takes over and we start to see profit taking coming down. Now what's happened is that behavior has found support here, both non-linear in that 89 EMA cloud and the linear here on this support and resistance zone. We can measure that wave for pullback, that profit taking behavior, and say yes, it's in the red zone, yes, it's in the linear support and resistance zone, yes, it's found support in the 89 EMA cloud, which is part of that swing trading bundle. The behavior on the Elliott Wave oscillator is within parameters. We've had a false breakout on the stochastic, these yellow dots. It's pulled back against there. It's like an elastic band. It wants to return to that bullish state. This is looking good for a potential fifth wave move up to get new highs. Now the next thing is entry strategies. I talked briefly about entry strategies for this xBrat, getting above this support and resistance zone, but now when we come to Elliott Wave, there's a few things that we've got to understand. The behavior, as far as all the measurements that we are taking, is brilliant. Okay, so we can look for an aggressive strategy, or we can look for more conservative. One of the things that will dictate that is the risk to reward. So how much we're prepared to risk on this to the reward to that fifth wave target zone. So I'm going to look at two scenarios here. I'm going to look at an aggressive scenario for an entry, and one of the things, this new development that we're looking at, is that we can see here the little cyan candles coming into this wave 4 is the down days, but they're lower volume. Then this day, Friday, we've got increased volume, and it's a bullish candle because it's green. So we've got more volume than these 2 days. We've got good price action, so that volume, there's more buyers interested in this. So we would say now then we'd need another green day today, Monday, and we want to just keep going. So again, where could our aggressive entry be? So one of the tools I use on ThinkorSwim is the regression trend channel. So what we look for here on a regression trend channel, we go from the 3 pivot to the 4 pivot. Okay, now I just use the standard settings on these. There's nothing too complicated here. We want the length 14, as you can see on our false breakout stochastic. We've got length 14 as well. We've got coefficients of -1 and 1 there on the deviation curve. So they're all pretty standard settings here, and then press OK. So what we have now is a channel that we can say has sort of been quite tight coming down here. And if we were to break out of this channel to the upside, we could say actually this profit taking is over and we are starting to go bullish. So for today's candle, we need to be outside of this channel, if you like, for an aggressive entry. So let's draw in a potential entry for today, which could be aggressive. I think I'd want to be above this little doji candle here as well. So let's be sensible here. And that sort of price, 90.26, is probably the aggressive entry. So today's candle position will be here, and so you can see it's breaking out of that channel. So this is an aggressive entry also, because sometimes we like to wait for that day to close before we look for the entry. So one thing you could say is, right, if the candle closes outside of that channel, then I'll go above the high of tomorrow's candle to go in. So that would be sort of an intermediate type of entry strategy. One of the most conservative entry strategies on this Elliott Wave indicator suite, we have a 6-4 moving average high in green here. So this takes the average of the highs for the last 6 candles and then skews it out into the future by 4. Okay, so for today's candle position, this is where we would be for the entry, just there. Now it probably won't go that high, but we do get big moves. So again, today, before the markets, we need to understand where we want the entry. Do we want the aggressive entry? If we don't want the aggressive entry, let's put the conservative entry on, and that price is around about 92.85, just in case we get one of these big moves up. So then when we get tomorrow's candle close, we can say, right, okay, if the candle breaks out of the channel, closes around about $91.35, we can then say, okay, for Tuesday's candle now, bar position is here. We could say, right, if it's above there, conservative entry will be outside the 6-4 moving average here at 92.15, for example. So there's quite a few options here to use that regression trend channel for aggressive, and then the 6-4 moving average high for part of our indicator suite for that conservative entry for today's bar position. So the next thing to do is there enough risk to reward for a conservative to begin with? Okay, so one thing I want to use is this fib extension. So the stop for any swing trade on this profit taking is just below the profit taking pivot, that wave 4 pivot there. So that goes on about there. Then our entry is at 93.07. Now, so our risk to reward on the conservative entry strategy today is 1 to 1.6 at the top of the target zone. So for me, that's okay. Okay, if I got an entry today, that type of risk reward. So if I was going to risk $10,000 here, I could win $16,000 at the top end of this, or $15,000 in the middle. So that's a decent risk to reward for a conservative entry strategy. Now let's just get rid of that. In fact, we'll just move it and adjust. If we were going to go aggressive here, let's move that out of the way. We're going to go aggressive entry today. Our risk reward would be a lot more. Okay, so for an aggressive entry, I need to edit those properties now. We would look, we're nearly 4% into the target zone there. So we are 1 to 4 to the target zone. Just adjust that again here. So I'm just going to adjust that to maybe 3.5. See where that lies. Let's colour that in yellow. Okay, yeah, so 1 to 3.5 is into the bottom end of that target zone. So you can see with being aggressive, you've got a potentially a better risk reward. But if you're going to risk the same amount for each one, your risk appetite really needs to come into this now. So potentially you could win $35,000 for risking $10,000 on here, or reduce that risk to $5,000 and win 3.5 of that $5,000 there. So you're looking more conservative with your risk, but even your potential reward is going to be around about $15,000 for that move, but it's got to make it. Now, conservative wise, yes, you've got to wait, but then you've got the intermediate. A good strategy for me is, if you're unsure, the markets aren't really behaving well right now, in sort of May 2021, I'm making this video, just put the conservative entry on. If we get a massive move up, it's going to be on big volume, it's going to continue to go, and it's going to hit that fifth wave target zone, 75% probability. Now, if it doesn't take that in today, and you get a candle that, let's just draw a potential candle in here, what it could look like, okay? If you do get a candle, an average type candle here, that breaks out of the channel, closes for the day, let's just get rid of all of these a second, and then sort of your entry strategy then could be the following day above that candle outside the 6-4 moving average high. So then that risk to reward, we just adjust that again here, is 1 to 2 in there. So $10,000 for a $20,000 risk, $10,000 risk for a $20,000 reward isn't bad. So for me, the strategy today would be put the conservative on. If it doesn't take it in, fantastic, okay. We then wait for the candle. If it closes outside and we get that higher high, higher low today, we can adjust an entry strategy tomorrow to compensate to go above today's high, outside the 6-4 moving average high, and get a slightly bit a little bit better risk to reward. Or you could be super aggressive and get in that really early. So there's 3 potential entry strategies there for that swing trade, and hopefully that all makes sense. Again, if it doesn't, go back and watch the video again, because this is relatively simple strategy. Before it was quite complicated because there's a lot of fib measurements and all that sort of stuff, and working out EMAs and everything. But what I've tried to do over the years, over the last 5 years or so, is develop these indicators. Purely was selfish to begin with, to save me time. Okay, I knew what I was doing, I knew what I was measuring, I knew what the false breakouts were looking at and all those different measurements I would make. But I was selfish in that I was getting older, getting lazy, and I wanted these things to do a lot of the jobs that was repetitive for me. So hopefully this helps. Remember, we've got the bias indicator there to help us with those xBrat, but also when we have the bias indicator yellow at the moment, today's candle, if we go higher high, higher low, if that goes green, that gives us that extra confidence, if you like, to get that more conservative entry strategy the next day or something like that. So again, we would like to see this today's volume, the price action on that weekly time frame, to give us that bullish bias on the weekly time frame, to give us more confidence in there. So there's a lot of checks and balances with this strategy, so you can understand when is the best time, how the behavior is working, measure that behavior, and ultimately then some safeguards to give you conservative entry strategies. Really, again, you can use aggressive if you wish, but again, for me, I like the 6-4 moving average high, the bias to be green, all the ducks in a row as far as behavior for the wave 4 is concerned, and then I get in. Slightly less profit, but if you're more consistent with this type of strategy, you will get more trades like this. So hopefully this has helped, and I'll speak to you all really soon.